I'm Charlotte McLeod with the Investing News Network, and here today with me is Thom Calandra of the Calandra Report. Thank you so much for being here online with me once again. Great to see you.
Always a pleasure, Charlotte. Thank you.
Yes, and right now we're a couple of weeks into the new year, which is very exciting. Before we start talking about what's coming in 2022, I want to take a moment to look back at 2021 and ask you how you would sum up the resource market last year. What did you see? I remember the last time we did this a year ago, you told us 2020 was cray-cray, so I'm interested to hear your description of the last 12 months.
Yeah, well, you know, our bread and butter at the Calandra Report, the precious metals, probably was not a cray-cray year because of speculation about higher interest rates. I think it's all a bunch of beeswax. However, Charlotte, for the so-called battery metals, future metals, as the recent conference in Saudi Arabia points out, anything that goes into an EV or a battery for an EV or a wind turbine, or you name it, copper, platinum, palladium, tungsten, nickel, rhodium. Great market right now. We've seen, you know, near highs or record highs or 10-year highs or 12-year highs for a lot of these metals. And I was just looking at a report this morning. It's on my computer here, and one of the leading analysts in, I believe it's Canada, in Toronto, points out, oh, I don't know, 18 metals and the firm's forecasts through 2026. And, you know, looking at it, gold and silver, 0%, platinum, a little bit higher, zinc, something like 18%, trending 18% higher, copper, which has been busting buckets, you know, steady 8% growth, probably into 2026. Nickel, more great gains. And so I have to believe that this battery trend will continue in, you know, in 2022, but you know, my my choices in copper, nickel, cobalt, all that stuff, tungsten, are already made, and I do know that and believe that gold, silver, and uranium will and platinum will continue to have some solid gains, and of course the equities too, Charlotte.
What do you think that tells us about the state of the world today, that we've seen these gains in some of the energy related metals and not too much going on in precious metals? What does that tell you?
Yeah, I think that there are futurists out there, and if you're going to be a good investor, or an investor that does her or his research, you have to try to follow some of the futurists who have been right in the past. You know, and we can all have our different choice sets of who those folks are, but when you look at the people who invest money, either on behalf of institutions or sovereign nations, they're tending to be younger and younger generations, like, let's say, your generation, Charlotte. Surprise, surprise. and the younger generations, I think you'll hear a lot of this going forward. Indeed, it came up. I was not in Riyadh, but I got to watch some of you know, some of the feed from speakers at the first annual Futures Metals Forum in Riyadh, Saudi Arabia, this past weekend and week. And you'll see that it's the younger generation that's calling the shots. I mean, we know that there's probably more active money, hot money, in the hands of operators who are 40 years or younger, because that, you know, that's what they're doing for a living, than there are in older sets. So, you know, as some of the as more of the millennials come on board, the EV wagon and the lithium ion wagon and the uranium wagon and the recyclable commodities wagon, I think we'll see more activity in those metals. And in fact, the trading volumes have been terrific, copper, nickel, even graphite's picking up. I mean, that report was showing 17–18% gain going forward for graphite. That's startling because I do have a graphite investment, but graphite's usually at the bottom of the barrel, right? Rising slowly. And then with relation, Charlotte, to gold, silver, and some of the other very interest rate sensitive commodities, maybe even oil. But it is the interest rates and the different central banks, including, of course, the European Central Bank, our own here in the United States Federal Reserve, just about any central bank you can think of is probably on the cusp of raising rates. I don't think that's going to make much of a difference. I mean, right now it seems to be keeping a lid on the price of gold and silver because people feel, hey, interest rates are rising. I don't any longer have to keep money in gold, which isn't yielding me anything. I can get a higher interest rate. However, there's the big, as we know, inflation question. And I have to believe that we haven't seen, if anybody comes to you, Charlotte, and says, gee, I'm afraid, I think that interest rates are going to have to rise a lot more to get to a real rate of return because of the coming inflation. You should say to them, yeah, and go back to 1980 or 1979 if you were around. That's real inflation. So let's see what happens when inflation isn't just trending, 6% or 7% year to year here and in other developed economies, but far more for whatever reason, whether it's fundamental reasons, price inflation, wage inflation, then we'll start to see some craziness go on with the precious metals.
Yeah, and I think those are exactly the kinds of questions that people are beginning to ask about what's going to be happening with inflation. And especially things that I'm hearing questioned are, the Federal Reserve has this plan for 2022. It's mapped out what it wants to do. Is it really going to be able to accomplish what it says it's going to do? I don't know what your thoughts are on that.
I am by far not a macro econ kind of person. Those people who know me and the work we do here at the Calandra Report know that I tend to focus on specific investments, specific sectors, and I tend to stay small with 2 or 3 exceptions. In this case, I do have to believe that we will, I hate to forecast, Charlotte. I read a report this morning from an economist who, no, I'm sorry, it was a pretty well-known fund manager who said that we need an interest rate shock from the leading central banks led by the Fed. So in other words, one big shock to rule them all, something like that, like not just a 0.5% or 1%, but 2% or 3% percentile points. I have no idea. I do know that, if you stick with at least 10%, and for me, it's a lot more, of your portfolio in precious metals, you'll be prepared when inflation comes pounding down the path. It's already coming to our households, Charlotte, and our workplaces, and and our cost of living, and our homes. So pretty soon, it will be pervasive around the world. And when it is, you'll see it's because there are still great growth possibilities out there for an entire new generation of technologies. And that probably at the core of those technologies are the metals, more or less any metal you can name, and throw coal in there too.
Okay, so before we get too much ahead into 2022, I wondered if we could talk about your portfolio in 2021. As we know, you focus mainly on the smaller companies with some exceptions, as you said. So perhaps you could talk us through some of the winners that you saw last year.
Well, my biggest winner, of course, is Ivanhoe Mines. And we did see its founder and CEO deliver a terrific presentation in Saudi Arabia at the first annual Future Metals Forum. Very, very instructive. Now, the gain there was, oh, I don't know, it was probably a 35–40% gain. You have to remember, I've been holding Ivanhoe Mines forever, it seems like. And, you know, I'm very proud that I'm still in it to win it. And I think my very first base cost was 90 cents. And I think it hit a new high today in Canada of, oh, it might be even $10.40 or so in Canada. So it's had a great year because of copper, nickel, zinc, palladium, platinum, but mostly because of Kamoa-Kakula. So, you know, when you have one big winner, it tends to knock out some of the losers. You know, I've been very fortunate with some of the other mines that I track very closely, and those include a few in Nevada. I-80 Gold Corp is doing a good job of really building a leading Nevada producer. I mean, actually producing gold and building new mines and taking over properties and taking care of its shareholders. But I've also had some terrible losers. You know, on the biotech side, I've gotten destroyed and continue to be pummeled by my lab up there in Nova Scotia, IMV, which I think has some of the best cancer science going around ever. But you know, getting shareholders' attention these days is tough. I've had a great year with Amex. It's a Quebec exploration company. Thank you, Amex. Thank you, Ivanhoe. Thank you, Nouveau Monde Graphite. That's been a terrific year, right? It's another miner developer in Quebec, where I own a lot of stuff. I saw one of my company's longtime holdings get merged in a very lucrative deal, Golden Valley Mines and Abitibi Royalties merging into Gold Royalty Corporation. And so, you know, now I own an even larger portfolio of royalties, you know, in many, many parts of the world, Colombia, across Canada, Nevada, and so on. And I mean, I'm looking for a couple of other winners. I mean, there are always winners. If they're not, I shouldn't be doing what I'm doing. On the, just to veer off from the metals for a second, on the biomedical front, you know, it's been a terrific year with BioCryst Pharmaceuticals, which I've owned a long time. And I got into a long time ago, I don't know if it's up here, some of my 2004 influenza books. I got into BioCryst for influenza, and I'm making a killing on hereditary angioedema. You know, but I think that goes toward the point that if you have the staying power and you're going to do well. You know, xtra-gold, one more example for you, Charlotte. xtra-gold resources in Ghana. I was just looking at my, I have quite a library here, but I remember getting this the last time I was in Ghana, and it's, you know, xtra-gold resources operates and owns more concessions than any public company. And yet it's, you know, it's only a $45 million company that doesn't need any financing. It has all of its financing. The stock did great, but, you know, it's still only a $40 million company. You know, it's done very well for me, for my family, for our children over the many years. And when I talk say many years, I'm talking 13, 14 years, some of those years being a fallow period, as in nothing's growing. And then wham, it all happens. So I'm sure you've been there, or some of your subjects have, Charlotte.
Okay, so definitely some highlights from 2021, and you are going in the direction of what I wanted to talk about, which is time horizon for investments. You've mentioned a few companies that you've been in for quite a while. So maybe you can tell us a little bit more about the time horizon you're usually looking for when you make a specific investment, or how you determine that when you're evaluating a company.
Charlotte, our daughter just took a spectacular engineering position in Seattle at a lab, and a Marine Energy Institute Pacific lab that tries to pull energy out of the water. Yeah, blue tech, blue tech. Anyway, and you know, like a week in, she sent me these, you know, the forms that you get when you have to contribute to the retirement plan. And, you know, hey, Pop, you know, there's only like 12 choices here. Which ones do I choose? You know, mostly I have to go for her with age. I mean, she's 22, you know, like go way out on the risk curve, you know, go Europe, and I would go Europe and emerging markets such as Taiwan, China, I still consider an emerging massive market. And don't worry, you know, you can revisit in 5 or 10 years. Now, I don't follow that advice because you can see probably that I'm not 22, neither am I 44. And, you know, when you get to be as, I hate to say this, old, nobody in the world is getting any younger. No one, not one person. But when you get to be a little bit older, you know, you're supposed to cut down on the risk. And I don't know if this is a psychological problem or an addiction to risk, but I do know that the highest risk investments, especially in metals and laboratories, metals, biotech, a lot of similarities. You know, it takes years, sometimes a decade or more, to see a company or a technology or a theme or an idea reach fruition. You know, if you think you're going to wake up tomorrow morning and see these printers printing up lungs that can be transplanted into your chest, probably not. Can you make money investing in companies like that? Probably. You know, if you're smart and you buy cheap enough. So I would say it depends. A long answer to good question, Charlotte. It depends on your age, mostly. Young, go way out the risk curve. After you start getting into your 40s and your 50s, you know, develop some strategies that might book some of your profits, as they say.
Yeah, and of course, it's very individual. You can't be making decisions for other people. But continuing on from this, how do you know when to sell? What's your strategy when you are investing in companies? Maybe you can talk a little bit about that, because I think it's connected to, you know, your time horizon when you enter a stock.
Charlotte, I must tell you, I get a lot of lashes across the back because of, you know, my inability or to sell, or my let's call it lack of vision when it comes to seeing the writing on the wall. Sometimes this happens to value investors. I didn't say valuable. I'm not a valuable investor, but I am a value investor, and I like to buy cheap. And value investors, people looking for those orphans, right, that have been abandoned, whether they're in metals, laboratories, you know, even the cannabinoids, the cannabis companies, media companies. You're going to have to really convince me to sell if a stock that I started buying at 5 and I'm still buying at 1, for example, my Nova Scotia IMV, you're going to have to really convince me that I should get off that wagon. Now, that's going down. I'm being very frank with you, and I think our readers, our subscribers, there are a lot of them these days, don't ask me why, are, you know, I think you have to take a different approach, of course, you know, when you're booking profits. And, you know, I know I've personally seen a lot more of that, probably in the past 3.5 years than I've seen in the past 10 years. You know, it's been a good period, a period that has made for very good times here at home and not a lot of tension. And I think that our subscribers have made a bundle um, in some cases, probably in most cases. I think when, there are these maxims, I don't have any, but there are these maxims that you should sell 50% of your position, when this happens, or sell 50% of your position when that happens, up, down, in and around. I'm not a chartist. I'm not a technician. I do know everything there is to know about the companies I invest in. And even more importantly, I know the people. And that's what, I don't get any inside information, but I do get a sense of where we're going. And if my trend, the trend that I see, the macro trend, the 20-year trend fits, I stay with it. And luckily, I'm at an age where I don't have to, worry about, and no, I don't drive a Tesla, but, but, I'm luckily I'm at an age where I don't have to, and have rarely, if ever, used margin. And, I don't have to beg, borrow to get money to invest. There are going to be other people with different bankrolls that are going to have different situations, Charlotte.
Yeah, I mean, these things are just so hard to quantify, but I think it is worth asking. I want to look a little bit more forward to 2022 now. So we talked about 2021, where precious metals were, maybe didn't perform as well as people wanted them to. Metals related to, the energy trend are doing well. As we look forward into 2022, what else can we talk about when it comes to trends in the mining sector? What are you seeing, maybe especially among the juniors, that you think investors should be keeping an eye on?
First of all, to see how real inflation is or can be, take a look at the average operating costs or all-in sustaining costs of the metal, right, that they're mining or hoping to mine. We've seen so many reports about this, and I've gotten so many personal takes on it from, CFOs, CEOs, engineers, geologists, VPs of exploration, scientists, lab workers, that the materials they're bringing in are more expensive for many different reasons, so many different reasons that the economist couldn't even explain it in an issue. But I believe that we will, cross your fingers. I think that we're going to see some tremendous opportunities this year. And once again, some of the battery metals companies that combine technology with a commodity. I mean, right now I'm investing in and have been for 3 years, in a company called American Resources Corporation, which does metallurgical coal in, well, it's based in Indiana in the United States, but what they do with the coal facilities that they have in the Appalachians is now they've started to develop a technology using electrolysis to perhaps, this is the holy grail, to perhaps extract critical minerals and elements, those 17 or 18 heavy rare elements that go into any technology. You'll see more efforts like that. I can't guarantee, and neither can the CEO, that American Resources Corporation's efforts are going to prove out, but it's done, it's put together the partnerships, the academic relationships, the research to, one day be a very profitable producer of critical rare earth elements. Energy fuels in Utah, Nevada, and Colorado, making a good go effort of it as well. So whenever you have a company that has what looks like good cash flow, positive cash flow, or as the cynics say, net income, forget about cash flow, doesn't mean a thing. And they're sincerely working on technology, And to get back once again to, some of these places in the world that have metals that either have never been mined, like Saudi Arabia, well, a lot of places, tremendous number of places in the world. I mean, you will see these places turn away from hydrocarbons and toward, metals that require some kind of electrical charge or battery. And it's only natural, and it's not just with the so-called EVs. I think you'll see great gains for companies, for cars, SUVs, and diesel vehicles and other vehicles that use platinum. Platinum's probably my top pick for 2022 if I were to have a pick. And I've been buying Aberdeen Platinum. It's an ETF that just has platinum, no palladium. As you know, palladium's had quite a run because of a lot of reasons, whereas platinum's been depressed. Platinum, as we know, is many, many times more rare in the earth than gold. So, it's like choose your candy, pick your peppermint, and do some research and find the companies that, or the metals, or the technologies, or the cancer therapies that are still cheap because they don't have anybody believing in them.
Yeah, and that absolutely was going to be the question I was going to wrap up on, was what are you most bullish on for 2022? So we have our answer. Sounds like it's platinum. So I think that's all for me. Thank you so much for coming online to talk about what's going on in the resource sector.
Oh, you've been terrific. Thank you, Charlotte, for listening to me. I
Oh,
want you to have a great day, a great week, a great month, a great year.
and to you as well. Thank you so much. Once
Okay,
again,
take
I'm
care.
Charlotte. Yeah, I'm Charlotte McLeod with the Investing News Network, and this is Thom Calandra with the Calandra Report.